So the first few Dragon interviews, we've done global macro with the very exceptional Ashwin Murthy from AVM. We've talked about proprietary trading with the exceptionally talented Keith Dack, or Dack as we know. And then of course, we've also seen the family office side with the talented macro trader and nature conservationist Gio Chen. But you know we had to go crypto. And what we do here at Dragon Interviews is we kind of go to the best of breed in whatever kind of asset class or field that they are. And our next guest is no different. It's a close bud of mine. I've known him since the last bull market in 2017, where we also got punched in the face as we went into the bear market kind of after. I hope you enjoyed this interview with Casper Johansen from the Spartan Group. Casper, welcome to Dragon, buddy.
Thanks, Kay. Thanks for having me today.
Pretty stoked. It's been a long time coming. It's taken ages to pin you down. I know you've been busy. All good. So I just thought maybe for context, so much to cover. Let's maybe break it down, your come up story, profile, background. I think very esoteric, very interesting, right? Sure. And then obviously we'll go into the Spartan Group. What is it? Who are they? What's the team? What's the breakdown? Because I think that's also very special in the space. Then obviously touch into crypto, get your overall thoughts there. And then after that, maybe we can talk about long-term kind of picture thoughts for the space, going outside of even 2021, 2022, and so on. And obviously we'll freestyle back and forth. How's that sound?
Perfect. Let's do it.
All right. Sounds good. Sounds good. So if you had to talk about kind of the profile, Casper Johansen, the inception, what's that look like?
I think, from a personal perspective, split my kind of formative years between Denmark and the US. And I think that as with any Genesis story, that obviously had an impact on what I decided to do and how I approach things. Growing up in New York gives you a maybe slightly more aggressive bent than growing up in Denmark, which is quite comfortable. And professionally, I started out my career, originally as a lawyer, but then I went into investment banking at Goldman straight out of school.
Okay.
And I did that in London for a few years, and I came out to Asia in 2004 with Goldman. So I've been in Asia about 17 years now.
Gotcha.
And originally came out for a year, but loved it, and haven't moved back since.
Gotcha.
And I kind of split my career between investment banking, and that's kind of been the core facet. But after about 8 years in banking, I decided I wanted to be a tech entrepreneur.
Yeah.
In fact, I wanted to be an entrepreneur my entire life, but I figured, use banking to build a capital base, but also just to kind of figure out finance, because I didn't have much clue about finance when I started at Goldman.
So when's this like roughly, in essence? I'm just trying to think from an economic cycle.
I left Goldman
right?
in 2008.
Okay.
The reason why I left was after bonus, I just made VP, bonus was paid out. It looked like the macro picture was not great, so I figured not much to lose by breaking out on my own now.
Yeah, they had this small thing called the global financial crisis.
Yeah, little did I know that Lehman would kind of fold a few months later. So
Sure.
People said that was a great timing, but it's also a personal thing. Like At some point, you just have to go do your own thing.
Yeah.
So I did a tech startup for 4 years, and actually I moved from Hong Kong to Beijing at that point in time to do the startup there.
Yeah.
And it was a great formative experience. Financially, it was not a huge success.
Yeah.
But I think you have to make some mistakes, fail, and then build on top of that, right?
Sure.
And my view is, once you roll the dice, you better keep rolling them. So I did go back to Goldman after that.
Yeah.
But the role I got there was quite entrepreneurial with a lot of freedom. So it kind of allowed me to transition from entrepreneurship back into finance fairly smoothly, actually. And then ultimately, I spent another couple of years at Goldman in the Beijing office, and then came here to Singapore in late 14, early 15.
Yeah.
And very quickly after that, went in-house with a client where a colleague of mine had gone in-house as a CFO, and we were IPOing on NASDAQ, and they needed someone for Asia. And so I decided to jump in and do that, because I'd been advising at Goldman, but I'd never been inside basically doing an IPO as kind of a principal or as an owner.
Gotcha, on the other side of the table, so to speak, right?
Yeah, exactly.
Yeah.
Exactly.
Yeah.
So I did that. It was a great IPO. It was a booming sector, renewable energy. And then the parent company made a few wrong moves in terms of allocation of capital, liquidity, and so forth.
Sure.
And despite being in a booming sector, actually went bankrupt.
Interesting.
Filed Chapter 11, which was very interesting, right?
Yeah.
Where people from externally say, well, how can that possibly happen? Because you're in a booming sector.
Yeah.
So I rode that out, kind of tried to just kind of survive and help through the bankruptcy. And when it got reemerged and most of the business got sold, I left and looked around what to do, and I ended up doing private equity. I came to Asia because I wanted to do something that was more frontier. Big parts of Asia in the meantime, in those kind of 10, 12 years at that point in time, had become fairly developed markets. So I wanted to work in emerging Asia, so I joined a private equity fund which focused primarily on Pakistan and Bangladesh. So I spent significant parts of 2017 in those two countries. It was at the same time I fell down the crypto rabbit hole in start of 17. So over the course of 17, my kind of time spent on crypto gradually moved from about 10% at the start of the year to 100% at the end of the year.
Yeah.
And it just kind of reeled me in more and more. I just got more and more fascinated with it the more that happened. And obviously it was a very hypey, very active time that, there were some amazing things happening and also some head scratching things happening at the same time. But it was so interesting. And I just I saw what I thought was the long-term potential of the sector.
The macro, big picture, where it was going. Yeah.
Despite what was going on, and definitely some of the things going on were not sustainable,
Yeah.
but realized that this will go through cycles like anything else, and probably in a more rapid pace and more extreme.
Yeah.
Like anything that's new, it's kind of more rapid, more extreme, and then it kind of settles down over time. So we're still at that very, very early stage of crypto. And so we've been in the space since, about coming up on 3.5, 4 years.
Gotcha. So before we go into Spartan, which we definitely will be, going back a little bit, like, a few kind of tangents, like why law in the first place, right? And then also on the back of that, what was the tech company that you went to kind of start up? Like, what was the actual business? I'm kind of curious on your thoughts of that.
Sure. So I was choosing between business and law at that point in time. And it's very, very hard when you're 18, 19, 20 to figure out what you want to study and where you want to go.
Yeah. It's almost a crime, really, to force people to try and make a decision.
It's a very difficult time to make that decision. Yeah. I was slightly older because I'd spent 2 years in the military between high school and that, where I was an officer in the Air Force. So I was slightly more mature and had more time to think about it. And ultimately, I chose law because I thought it would give me a very, very good toolkit for business in general.
Yeah.
Also, partially because I'm fairly competitive, and it's one of the hardest things to get into. So that in itself was an attraction.
Yeah.
But mainly because I read The Firm, and I saw these
great
TV
movie
shows,
as well, right? Yeah.
And but also knew that law was the foundation of business. So that was the main thing, really. So I did think at that time that I wanted to be a lawyer.
Gotcha.
And throughout my law studies, like the last 3 years or so, I worked as a paralegal about 30 hours a week next to my studies. And that was how I realized that this was absolutely not the career for me. But it was good money to make sure I didn't come out with student debt, and at the same time, it was super instructive, because had I not done that, I probably would have started a career in law. And it's just, the earlier the better you get to know what you want to do and what you don't want to do.
Yeah, so already practicing some risk management through exposure already, like while studying for the actual.
That wasn't the intention. The intention was to get a good job at the end and build up my credentials. Yeah. But then I realized from doing that and just looking at the partners and the dynamics and kind of what the job entailed, that I probably wanted something else.
Now, going back just like, because you have one of the best minds in my ecosystem and inner circle, and we have tons of mind jams, you and I, on all kinds of subjects and topics. Do you think that law background has given you like a different way of maybe approaching things from, let's say, someone that did just, let's say, business or something like that?
Yeah.
Right? Because I've tended to find, like in finance, there's so much training that's on the job and so much that you can't read in a textbook, so to speak. So it's really about kind of the framework and kind of approach. Would you agree with that?
I think so. I mean, there's a few things that helped me, because when I started at Goldman, I didn't even know what market cap or EBITDA was.
Sure.
I was completely clueless on finance. So at least I had a foundation, one from the military in terms of working hard. Yeah. Like when people were complaining, I was like, what are you talking about? We have electricity. No one's shouting at you, only once in a while. Nobody's shooting at you. You have food.
Sure.
You're not cold. Sure. I mean, give me a break.
So they give you the right frame of mind, right?
Yeah. So that's one thing. Another thing was law. You also have to, if you want to do well in law, you have to work really hard and study a lot.
Yeah.
And you have to dissect and understand a lot of complex relationships. And you almost always have to, the tests are always about the exemptions or the exceptions, not about the main law, because that's too easy. Everybody would just ace it. So you kind of learn to structure your thinking that way. So I think that was helpful in terms of getting up to speed on finance. And obviously all the legal aspects of capital markets work or M&A, that was much more intuitive to me. So I didn't have to catch up on that. And then, so earlier in my career, it didn't help as much, but later as you start being more senior and you're more involved in all aspects of the process, it helps. And also in starting my own company has been very helpful because there's a lot of, we don't use lawyers that much. I can do a lot of the legal work myself.
Yeah.
And also when we do M&A deals now, like I also get very involved in that and the structuring, and definitely the legal background helps a lot there. So I think because it's a very Anglo-Saxon approach to things.
Yeah.
Like when in Denmark, you study law, you work in law. I mean, you'd be crazy not to. Why else would you study law 5 years, 5-6 years,
Sure.
and then do something else?
Sure.
People just think that you just wasted 5-6 years. You know, when I started at Goldman, people had studied, classical Greek philosophy, art history.
Yeah.
Some had studied finance, some law, some had studied sociology. It was just like this mix of people who, whatever they did, they had showed that they could excel in whatever they chose to do. And then basically the idea was, well, you can learn this. You can pivot and you can learn this too. Whereas in other countries and cultures, it's a bit more you pick your track almost.
And that's
from the
it. You
start.
stick with it, right?
Yeah, for the vast majority. There are exceptions, but
Yeah.
for the vast majority.
Yeah. No, I tend to kind of agree with you. I think it's a big issue, right?
Yeah.
Right.
Yeah.
And going back on the startup, so you'd gone into banking, you had gone to one of the best shops on the street, obviously made VP, and then decided to spread your wings and take the leap.
Yeah.
Why then in regards to the business model and kind of the idea, and also why kind of Beijing, right? Because were you in Hong Kong at the time?
I was in Hong Kong,
Yeah.
I think if there's any trend in my career, it's doing things where people are like,
what are you doing?
What are you doing? You just made VP at Goldman. You just graduated law. You've got a job lined up, secured in the biggest law firm in Denmark, and now you're quitting that and going to do something you don't know anything about. You're moving to London. Yeah. You just made VP at Goldman, and now you're quitting to do a startup. Yeah. Take no salary, live in Hong Kong, and try to raise some money. I did that because it was an itch I had to scratch. And as with any startup, we pivoted a few times. Sure. We started as more of a really a workflow for legal and corporate work, where some have started to emerge now. We're basically like a Carta. Carta is probably the best example of what we were trying to do. Sure. But about.
Do you want to explain what that is?
So it's a tool which you as an early stage startup can use that manages your documents for like equity subscriptions. They have standard documents. It manages your cap table, your shareholders. Your shareholders can interact with it when they need to sign something. It just minimizes that admin burden.
Takes out all that friction and all the
Exactly, removes all that friction and just lets you focus on your business a bit more. That was what we started with, but again, like 14 years ago. And since then, back then cloud computing wasn't even a thing, right? Let alone all these different components that you could take that were open source, plug them together and build something. Yeah. Back then, you were really building from scratch. So we started that. We kind of did my co-founder was from Google. Like a product manager / engineer. So we did like a tour of Asia and China meeting investors, and everybody pretty much thought it was a bad idea. Yeah. And sometimes as an entrepreneur, you have to just say, well, I think it's a good idea and push forward. And other times you have to say, well, maybe it's a bad idea.
So it's a fine line, right?
Yeah.
And I do know there's some VCs who also think out the box who they're actually waiting for that idea that everyone hates.
Yeah, and we didn't run into that VC.
Okay, fair enough.
So we pivoted. And one thing we realized in doing our research and trying to set this up was that there were very large amounts of public data available that were business relevant, that were structured in tiny silos. But if we could harvest all that data and then make it searchable and make it into business intelligence and make it real time, that could be quite valuable. So that's what we ended up doing. So it's kind of a big data play. But again, back then there weren't the tools were not available for it. We pretty quickly, I think in 08, 09, we started using AWS, like the cloud computing. Yeah. But it was really expensive back then. Yeah. And it was not great. It was still very hacky, it was slow. And we had moved from Hong Kong to Beijing at the time. My co-founder and I started in Hong Kong. But in Hong Kong, we couldn't find any engineers. If you're a good engineer in Hong Kong, you want, first of all, it's a super expensive city. So like stock options, and there's no tech environment, and there's no examples of people taking stock options and making it big. So there's no validation.
Sure.
And there's also a lot of, it's expensive to live. You can't pay your rent with stock options. And then there's a big finance sector where if you're a good engineer, you can actually, or a data engineer or developer, you can make very good money working in the banks.
Yeah.
So we couldn't get talent. So we looked around the region and we decided, like, why not, if we're going to take a bet on something, why not just take a crazy bet and try to do it in Beijing?
And go all the way.
Which now sounds like, oh yeah, China, tech, Alibaba, Tencent. Back then, again, another example of people thinking we're totally nuts, right?
Yeah.
So we did that, and we built up a team there. And we were in 2008-9, we were running a team of about 20 people with a nice office near Sanlitun in Beijing for about 20,000 US a month.
Wow.
Right? So we back then you could do a lot with your money. Like a fresh, highly qualified engineer would maybe be like 1,000 US a month.
Yeah.
And people we hired out of like the top tech firms there, maybe like 3,000-4,000 a month, right?
Yeah. And I can imagine in Hong Kong that may just cost you a very talented engineer for 1 month just the salary, right?
Yeah. In Hong Kong, we were just literally lighting cash on fire.
Yeah.
Also because my whole network they were still all like bankers and finance people. So every time we went for dinner, I was like, I felt really bad afterwards. It was a great dinner, but I'm like, oh man, I can't believe I just spent that much. That's like another month less of burn for me.
Awesome.
So that's why but then ultimately, where we failed was we did not find product market fit. So, I learned a lot from that, and I actually ultimately shut it down. Like we had to, because it just wasn't working, which meant our investors lost their money, which obviously felt extremely bad about. We lost a lot of money in the sense of a lot of opportunity costs. There's like 3.5 years of earnings there that all my colleagues at Goldman had made, which I just didn't earn. In fact, I was burning, right? So at the time, like these are, it's when you fail as an entrepreneur, it's a very emotional thing because it's very much tied in with your identity. It's a personal failure. Yeah. It's not like I got fired and, It's
and that's the whole point of why you did it in the first place, is the buck stopping with you, and now all of a sudden it's not playing out as you envisioned, right?
Yeah. So I started what I realized was it's very hard to raise money as an entrepreneur, obviously, especially as a non-Chinese entrepreneur in China. Yeah. So I started like a little boutique business helping entrepreneurs, but primarily foreign entrepreneurs because they felt they needed my help more, raise money.
Gotcha.
And as I was doing that, I was very fortunate that Goldman got back in touch and said, hey, we heard you shut down your startup. You're in Beijing. Yeah. How about rejoining us in Beijing, but in a regional role? Yeah. One of the challenges I think
that's quite rare, right, for Goldman to ask somebody to come back, is my understanding, right? Generally, once you leave, it's kind of done and dusted.
Yeah,
right?
there are people that come back second, even third time. Okay. But yeah, I was definitely fortunate. Sure. And I actually didn't think I would be going back to banking, but as they described the role, it was clear that I was basically had a mini business to run. Yeah. Within the business, and that it was up to me to make it sink or swim. Yeah. So I had that motivation that if I didn't get business, I might not be there for long, right?
So still keeping your entrepreneurial hat in essence, right?
Yeah, exactly. Yeah. So I decided how to spend my time. Okay. I had a manager in the sense of if I needed help, I could go there. Otherwise, I generally wasn't bothered. Okay. So yeah, that was how I then ended up back in. But from my startup, the main thing I took away is next time I'm going to do a startup, I'm going to try to do something where I at least have a clue before I get started and have because I had no clue about the business I started with, big data, and like it was just all new to me, and it was fantastic. But and also as an investor, because I have been investing about 15 years, and as an angel investor, I do support first-time entrepreneurs, but I'm very careful about it because I know myself as a first-time entrepreneur. It's like you're almost paying for the person to fail. Yeah. If sometimes people ask me what are my biggest regrets in terms of that kind of failure, it's just that I didn't fail quickly enough. Yeah. It took me 3.5 years to.
Yeah, I'm with you.
I could have failed in 1.5 years, 2 years. Yeah. and started something else, but it's a fine line because you also want to be tenacious and not give up and hold on and see if you can make it work. So it isn't easy.
No, and it's hard to market fully because it's obviously always easy to point at something that's like nominal and tangible, like cash and hours spent and so on. But obviously you gained so much experience and you wouldn't be, half the person you are today spearheading what you're spearheading without that kind of experience. And it almost sounds like, a lot of people especially successful entrepreneurs and especially successful VCs, they don't like to talk about the element of luck. Right, but it sounds like almost you guys were maybe just a touch too early, right?
Yeah, we were too early. Yeah. But I also think we're just not good enough at what we're trying to do.
Okay,
it was not. And also another mistake we made was our product was primarily we were developing in Beijing, but it was primarily Western market data and Western market use cases. So trying to do something where you're not in the market where your end client is not impossible, but it's very difficult. Also because your team, and at the time, China was not nearly as international. It's only 10, 12 years ago, but it's a huge difference. Yeah. Our engineers really struggled with the use case. And that's super important.
Yeah, if they're not really on board from day one, it's really tough, right?
Yeah. So
awesome.
yeah.
Great. All right. So in the Spartan Group, walk us through the inception, walk us through surviving the bear market because you are still here. And obviously where we are now, 2021, and thoughts for the vision long-term on the firm.
Sure. So, I mean, it didn't really start as a Spartan Group. The way that I typically, when I angel invest also, because that's how crypto started, was an angel investment into a startup, is the best way to understand things is to deploy a little bit of capital. Because then I think you're forced to review it, make a decision. Okay, am I going to invest in this? And then just deploy just enough that it makes you pay attention, and that if you get it wrong, then it's not the end of the world.
Some skin in the game, right?
Some skin in the game, yeah. So that's how we started with crypto. It was an angel investment in a company that then went shortly, or that was like early 17. Shortly after that, they started talking about doing an ICO, and I was like, What is an ICO? I thought it sounded a little bit like, you mean IPO, no ICO. And then they did an ICO and raised a lot of money. And we invested in the ICO because, again, kind of like, okay, let me learn about it, put a bit of capital in. Yeah. And it did extremely well. And at that time, because they were quite successful, they got approached by a number of people like, hey, can you help us do our ICO? And how did you do it? And of course, they're running a business, so they don't really have time to do that. And they said, well, no, but we have some former or some bankers that kind of know how to do things, and you can talk to them. And then we just started getting all these, and we were also investing in other projects at that time, but again, as kind of more of an angel investment thing. It was still not completely switched to like, hey, let's do this full time. We started getting all these
it's
requests.
Kind of opportunistic, right?
Very
special
opportunistic
stuff.
Yeah, and people were saying, hey, can you help us? Can you help us? And at some point, when you get hit by enough requests, it kind of clicks and
universe is trying to tell me something.
Yeah, maybe there's a business here. Maybe I should just stop, listen. And obviously in 17, a lot of the requests were from projects where no, I don't, I'm good, right? I might invest a bit, but I'm certainly not reputationally going to go and put myself out there as the advisor.
Sure.
So that's kind of how it started. And then and just bringing it back to who we are. So my wife and I she's been in VC and tech for a long time, also started at Goldman, similar to me, but really is the one who pulled us into this sector and into these investments. And it was some entrepreneurs she'd known for years, and she'd been talking about Bitcoin for a while where I was like poo-pooing it, or not poo-pooing it, but just like I don't have time. And so she pulled us into it. And then, so we decided that, again, because we're getting all these requests, that we should set up an advisory business, because that's what we know.
Sure.
And again, coming back to my previous experience, this is a skill set that I know that I have and I can do. It's a new sector, but at least I'm bringing in something that I know and that can adapt to a new sector rather than just coming in and knowing nothing about anything, right? Yeah. And then we're good friends with Kelvin, our third co-founder, who we've known back from kind of late 90s, early 2000s when we all started at Goldman. And Kelvin, we knew had recently was launching his own VC fund and looking at new technologies, including AI and blockchain. So we pulled him into some of our investments, and we started talking crypto a lot together. And kind of one thing led to the other, and we decided that, why don't we start something together? And Melody and I wanted to do the advisory side, and Kelvin wanted to do the asset management investment side.
Yeah.
So we decided to set up an advisory business, and it's a low barrier to entry because you don't deploy capital, you deploy human capital. And in 2017, that's why there's so many advisors running around, but most of them, as you say, evaporated very quickly once the bull market ended. But we wanted to set up a proper advisory boutique, based on our training at Goldman, right? Professional services to professional companies. And so Melody and I set that up together, and Kelvin's background is that he was a partner at Goldman. He was there 18 years. He was head of equity research. Then he went into the hedge fund business. So he's been on the investment side his whole career and market side. So it was a very natural thing for him to set up our fund and for us to set up our advisory business. And then we self-funded it, and we run the whole thing together. So the advisory business was already running as of mid-17, and we were advising on ICOs. And the fund business, we then started in early 18, raising capital for the fund. And that obviously was a very, very difficult time to raise capital. So on the advisory side, we were inundated with requests from people to work for them because there just weren't very many advisors and frankly, very many good advisors at that time. And as we added more track record and did a few, successful projects, obviously people noticed that, and then we got more business that kind of feeds in itself. But Melody, Kelvin, and I have all spent kind of our careers, trying to do things the right way and build up a reputation and a network. So we're very conscious of that. So
you guys turned down a lot of business and a lot of money.
We turned down a lot of business, and we turned down a lot of opportunities because we wanted to make sure that anyone we took on, like 2, 3, 4, 5 years down the line, we could still proudly display the logo on our website and say, we did work for them. So we didn't want to be too opportunistic and just have a flash in the pan business where we could do financially very well, and over the period of 6 to 12 months, however long this kind of boom lasted, and then just disappear, right? So that was very, very important to us. So we, for whatever reason, started working a lot with US and Silicon Valley, New York-based projects, probably because some of the first were from there, and again, then people talk, the funds that are invested in them talk to other, their other portfolio companies,
word of mouth,
founders talk to each other, kind of word of mouth, really, right? So we've been fortunate that all our business comes from referrals. So over the course of 18, we did a number of token offerings we worked on. And what is that? Well, that is basically a project which, instead of raising equity, they raise tokens. So some of them will have equity value, but most of them, the actual legal entity itself doesn't really have much value. The whole value of the system, the ecosystem, the network that they're building is in the tokens. And the founders have some of those tokens, but then the portions are set aside for business development, ecosystem, and then some are done in token sales, right? Where there's really no financial incentive or linkage intuitively or inherently in there, but you're part of a network where if it gets traction, that token gets used in that network, and there'll be more demand for that token. And hence, if you have an investment hat on, hopefully it should be, become more valuable. But a lot of people also just buy the tokens because they believe in what these projects are doing. I mean, people have different motives for doing that.
Sure.
So we worked with a number of these projects, but always making sure that it was very, very strong founding teams. And then the advisory business also moved. So we still do these. I mean, to give you examples of companies we've worked with companies like Origin Protocol, Blockstack. Last year we worked with Solana and Dapper Labs. I'm happy to talk about each one of those, but those are all leaders in their respective fields of what they're doing. Yeah. And then in the middle of 2019, it would have been, we started seeing that the sector had grown quite a bit, and based on our experience from traditional finance, we realized that the sector is going to consolidate because there are some players now that are starting to generate, a lot of capital, and they'll want to grow either vertically, horizontally, or both. So we started thinking about how can we get into the M&A space here, because first of all, it's a product that I really, really like doing. I did quite a bit of M&A at Goldman, and I really enjoy the complexity of those transactions.
A lot of moving parts, right?
A lot of moving parts, incredibly difficult, very strategic, tactical, extremely stressful and frustrating at times, but very rewarding also. Yeah. Especially when you're working with founders and helping them sell their babies/companies.
Correct. Yeah.
It's almost like it's a very personal thing when you work with a founder and selling their business. It's hard to exaggerate the importance of it. Sure. So we started looking at that, and as we were doing that, as with many things, we kind of mother luck played in, right? And we got a referral to a company that was looking to sell a stake, which was a crypto derivative exchange called Deribit, based out of Holland. So we won a mandate there, and went through a process and ultimately helped them sell a minority stake in the company.
Can we just give some context? Because I think a lot of people will be surprised at the size of, let's say, the volumes that are traded in derivatives and in crypto and so on and so forth, if someone's never heard of Deribit, for instance. Right?
Sure. So when we started working for Deribit, like a good day would have $300 to $500 million of trading volume. An amazing day would have $1 billion. Mm-hmm. Nowadays, Deribit is doing billions every day. And back then, they were the first really to do options in crypto.
Just kind of focus predominantly.
Are still the leading options platform. And then they've later added on futures and perps and other products. But they're a place where, just like in the traditional markets, derivatives are and will grow even more, will be much bigger than the underlying, basically. So they're a crypto derivatives platform. So we help them sell a stake, and these M&A transactions are just as complex as any traditional M&A. And all the details around that transaction were not disclosed, so I can't talk too much about it. Yeah. But it was a great first deal for us, and the founders were extremely supportive. And
I think the value is out publicly. It was $150 million, I believe, was the stake. Is that correct?
Not the Deribit one. That wasn't disclosed.
Okay, yeah.
But we got it done, and what we try to do is also, when we work for a group of clients, basically, or founders or teams, we want to make sure that we can always go back and use them as referrals if we need to.
Correct.
We never want to end up with a client who we would kind of be hesitant to refer people back to talk to about how are we to work with. Yeah. So they were also very helpful in, providing that kind of help to us when people say, well, can I talk to people you've worked with before, just to, make sure that I'm not missing anything here.
Sure.
So off the back of the Deribit deal, we were lucky to be approached about another M&A transaction. And that was more of a classic style where there was a beauty contest done, which is what I'm used to from the Goldman days, where 3-4 advisors come in and pitch for the business. And you got to pitch both on capabilities and fees. And then you kind of get narrowed down. There's usually like a few of you left. And then that's when the gloves kind of come off and you got to win the business. And I think in that that business we co-advised with Mike Novogratz's Galaxy Digital. Yeah. And the guy who was heading up the business at the time, Ian Taylor, was also a longtime Goldman guy and Goldman alum. So that didn't mean that we took it easy on each other winning the business. And ultimately we ended up with a co-advisory role, which worked out phenomenally. So what we did was we worked with Ed Moncada, who's the founder of Blockfolio, and his team to basically line up an entire sell-side process where it's very much like in traditional banking. You prepare all the materials, a story, the list of potential buyers, the strategy, tactics for approaching them. But then what happened was we were fortunate that we were able to accelerate the process and find a really, really strong buyer in FTX. which is a Hong Kong-based crypto, at the time, crypto derivatives exchange, but now does a mix of spot and derivatives, but at that time, still kind of up and coming exchange, and now it's very much part of the mainstream fabric and one of the biggest exchanges in crypto. And they were on the path to that kind of mid last year when we started talking to them too. And their founder, Sam Bankman-Fried, is one of the key kind of opinion leaders and I would say one of the most respected people in crypto.
Yeah.
So there's just this is the thing with M&A, right? It's not like a fundraise where you go and you approach 10 names and then 20 and then another 30 and you refine your pitch, and over time you then, out of those 60 or 70 names, you get 2 leads and then like 8 or 10 that come in behind it. M&A is much more targeted and strategic. There's not a huge buyer list for many crypto businesses, so you really got to get it right. You have one chance at the pitch with each potential buyer. If you don't nail that, it's there's not that many others to go to. So I think the fit with FTX was just phenomenal. And what we ended up with as a result was we sold Blockfolio for $150 million to FTX.
Yeah.
And the consideration, the payment by FTX was a mix of cash, shares, and their tokens. They have a token called FTT token.
Sure.
And again, that significantly increased the complexity of the transaction because there's moving parts. The FTX equity is not publicly priced. The FTT token is, but crypto tokens can be quite volatile.
Yeah, it's a hybrid, right?
Then there's cash components where any buyer will always try to minimize cash components because they want to save as much cash as they can to run their business. So, and there's a cross-border transaction. So there, and lots of shareholders and very strong shareholders on the Blockfolio side, very, very high profile crypto and traditional funds in there that all have an opinion on how things should be done. So it was a highly complex transaction. And we work with top law firms on both sides. And I talked privately to some of those lawyers and they said this is some of the most complex M&A they've done,
ever seen,
both structurally and in terms of the whole transaction dynamic. And it was also done very, very quickly.
I think for context, because I don't think a lot of people appreciate, they may like, it's a $150 million deal, but it's a $150 million deal in a new market, right? And
in crypto, that's a huge transaction.
Yeah, I mean, it's $40 billion in traditional assets.
That's right.
Like that's the back of the envelope work.
Yeah, I did some back of the envelope afterwards, just looking at the crypto market cap at the time.
Yeah, exactly.
Which was only like 300 billion at that time.
Yeah.
And then look at the traditional, just the equity market cap, not let alone other types of assets. And if you then just kind of on a percentage of total market cap basis, took the 150 million, it would be about a $40 billion transaction in the traditional markets.
Yeah, which is huge. I mean, you guys are definitely pioneering stuff on the advisory side. No doubt at all about that on my side. And how is the Kelvin side of the business on the digital asset management side, and he sits out of Hong Kong. How is that broken down? I believe there's a hedge fund, and currently there's also a VC structure, correct? Right?
Yeah. So we started that business in early 2018 with a fundraise, and with any fundraise, you go to friends and family first, like people who know you, trust you, and you try to see if you can secure their capital.
And obviously, this is early 2018. Now obviously it's clear in hindsight, but we were basically coming off the highs, right?
Yeah. I mean, we were building the deck when the market completely crashed, right? And then about 2 months after, we kind of more formally launched the fundraise. And that was when a lot of people, you pretty much couldn't go to anyone who was in crypto because a lot of them got destroyed.
Yeah.
And were just scarred and had not,
sitting on drawdowns.
Some have not recovered, some have recovered, at least mentally.
Yeah.
But so we went to people who did not have crypto allocations and exposure, and basically, got relatively based compared to their overall net worth, relatively small checks from them. It's kind of like I want some exposure. Let me get into this. Okay, I trust you. And I think we were able to raise in 2018 mainly because of Kelvin's background, frankly, because of his background at Goldman, and because they know that he's staking a lot in going into this, and he really believes in the space. And he was highly respected research analyst, and
for a Singaporean partner as Goldman, if I recall correctly, which is a nice little twist.
Yeah, exactly.
And you guys had a lot of your wealth basically in this, right?
We put a lot of wealth into it.
Yeah.
I mean, also when we, and this is just for context, when we first went into Spartan, I mean, at that time, having come off of, still recovering from 4 years of entrepreneurship, but had been back at Goldman a bit. And, but, Melody and I, we both stopped what we're doing. So we went from double income to zero income.
Yeah.
And then we put a lot of our savings both into crypto and into the fund.
Yeah.
So we kind of just went
all in
on it. Which is a bit harrowing when you have 3 kids and you live in Singapore. And,
and then you're going through this bear market, which was...
then you go through the bear market.
Yeah.
That just for context. So we had a lot of skin in the game, and people realize that, and then it helps people bet on you because you're like, okay, you've got a lot more to lose than me. So
correct. So
I know you're not gonna...
I'll back you at the very least, right?
Yeah, I know you're gonna live, breathe, eat, sleep this.
Yeah.
And then ultimately, if you fail as an entrepreneur...
tried everything.
If you've done your best and tried everything, then that's kind of the best you can do.
Yeah.
So that helped us raise some money, but we were almost half the capital in the first close.
Yeah.
And that first fund is a hedge fund structure.
Yeah.
Which means that it's open-ended. So every month, and people can subscribe at NAV. So we can take in more capital. So the first close isn't like the end-all and be-all. It's just a start.
Yeah.
The first close was August 1st, 2018. And then we were very slow to invest because the market was extremely choppy at that time. So I think after about 5-6 months of investing, we were maybe still only 30-40% deployed, which normally in a hedge fund, I mean, you raise all the money right away. People pay you to invest. So sitting on money is generally frowned upon, right? Because you're clipping management fees and seemingly you're not doing anything. But in a way, by not doing anything and staying in USD, we're kind of shorting the market, right? Indirectly, at least on a relative basis. So that helped a lot because we knew other funds that started at that time and just went directly all in, deployed right away. And once you're down 50-60%, you got to double just to recover. Like a lot of people don't realize that math. It's very simple when you think about it.
Yeah, but it starts to really work against you, right?
It really works against you. And then, so we've had inflows since. Like to start with individuals. Now we have some fund of funds, some crypto fund of funds.
Yeah.
They are good because they do very, very detailed due diligence, which helps you. We already have a good professional setup, but there's lots of bits and pieces that maybe as a small fund you just don't have. But if you want fund to fund money, you got to have it. Yeah. So that helped us really just round out everything. Yeah. And then we also have some family offices. But that fund, that AUM has now grown significantly, primarily through gains, frankly. Yeah. And we obviously continue to have significant exposure personally in there. And then in terms of what the fund focuses on, it typically has 25 to 30 positions at any given time. And again, it's a fundamentally driven fund. It's long short, but we do a lot of analysis and take views on what we're investing in and when we get in, when we get out. And in 18 and 19, trying to explain that to people like fundamentals in crypto. Yeah. Even to people in crypto, a lot of people were...
I think even today it's an issue,
Even
right?
today, people might still say that, well,
like,
okay,
it just goes up. Look at it, right?
Yeah, let's see how you do, right?
Yeah,
and you're still just kind of good timing, and it's all luck, and it's all vintage. Correct. And, time will tell, right? We're confident that that's not the case, but, the proof will be in the pudding.
That's for sure.
So
that's for sure.
I will eat humble pie if if that turns out to be the case.
But won't be the first time for both of us, so that
exactly.
comes with the territory.
Yeah, and we have more to lose than anyone else.
Correct. So that's the hedge fund side, right?
That's the hedge fund side. And then we started in the hedge fund initially, we had more of a fairly large pocket of private investments, as in going into sales before the tokens are publicly traded and where you have some lockup. Yeah.
So almost like a pre-IPO, is that maybe a way of thinking about it, right?
Kind
Just
of,
the equivalent, obviously, for the crypto side, right?
Yeah. And at the start of the fund, maybe we're 35% private. But over time, as the space grew, and as the fund grew, we kind of had to take that down because we also saw some other funds that kind of got in trouble because they had a very, very big private allocations, and they couldn't meet redemptions. Since then, I think a lot of those private investments have turned out to be great, and the funds have done very well. But if you're a hedge fund where you take monthly subscriptions, you also have to be able to, on a monthly or quarterly basis, actually give people their money back if they say, hey, I want my money back, right? If you can't do that, it's really problematic. Yeah. So we've cut down the size of our private pocket now to probably something like 10%. But we got early into DeFi, or decentralized finance, which I can come back to explain in more
let's
detail
do that when
later.
we talk about the space as a whole.
Yeah. But we were early into that space, and so we kind of, we were very active. We started becoming more and more opinionated around it, and became, one of the opinionated crypto Twitter, because Twitter's the main environment where people exchange opinions and chat. If you want to build up a reputation, good or bad, then you do it on Twitter.
Sure.
So we became like opinion leaders. There's not 5 or 10 of them. There's maybe like 50 opinion leaders, but we were some of them. So we started, and we started building up a network. We started building up a good track record, and started getting more and more opportunities to invest into DeFi projects, including early stage ones where either it was an equity check, which our current fund can't do, only does digital assets, no equity, or it was tokens but with long lockups, which again doesn't really fit our current fund. So, but they were attractive opportunities. We didn't want to let them go, so we started investing with our own balance sheet, with basically founder money. I mean, we're self-funded. We haven't taken any outside capital into the operating business, only into the funds. But very quickly, that's not sustainable. One, because we already have lots of crypto exposure in our funds and so forth, and keep putting more money and fully funding all the deals, it just doesn't scale.
Yeah.
And if you want to be relevant and keep getting good deal flow, then you have to keep investing.
And the space is getting bigger as well,
It's getting bigger.
Yeah.
So we realized that we needed a different fund structure vehicle where we could do these DeFi deals. So we decided to raise a venture fund. And obviously the main difference between a hedge fund and a venture fund is that when people commit capital, it's typically, for us, it's a 5-year commitment, but in many funds it's 7 or 10 years, and you cannot get your capital back during that period. Yeah. It gets called in stages, so you don't fund all up front, but the commitment's a commitment, and it's a long-term investment. That then allows us to take the capital, invest in these early stage deals where we know it might be 3 years before we see the money back, and then participate in these deals. So that's what we did. We started in Q3, putting the fund docs, a structure together, talking to people, looking for some leads. And then our target was to raise 10 million as the first close, and maybe close it out at 20 to 25 with the second and third close a bit later. And as we were doing the discussions over the course of December, Christmas time, it was looking like 10 million was kind of there. We're closing end of Jan, so we figured let's round it out, see what we get in Jan, but we were kind of there for first close. We felt pretty good about that.
Yeah.
But then, a lot of things happened in the space between MicroStrategy, Michael Saylor, Elon Musk, GameStop, which wasn't directly crypto related, but helped a lot of people shift their mindset about financial markets. And so we got an overwhelming amount of interest. So we ended up doing a first close end of Jan at just over $30 million.
Yeah, so
and
almost
frankly,
3x what you were thinking.
Yeah,
right?
and frankly, we could have done more but at some point you have to get that close done because you want to get the capital in and start investing, right? But then now we're doing the second close of 20, where there's also, it's pretty much oversubscribed already. But we're kind of taking it slow with it, and we'll probably do the second close in April because we want to focus on investing too. Fundraising is really time consuming. We still run a very lean operation, so we do a lot of the hands-on stuff ourselves. But one of the things I'd say that was very we were quite proud of in terms of the fundraising was the pockets of investors that we got in. One was existing investors in our first fund that then put in additional capital into the second fund. So that's obviously good. We've got happy clients, so to speak, that are reinvesting in us. Yeah. So in addition to the hedge fund and the DeFi venture fund, we also have a managed account that we manage for a large kind of macro investor, one of the top macro investors that's kind of up there with the Druckenmillers and Dalios of the world.
Gotcha.
It's not public who it is, but again, that's just a managed account where we have a pocket of capital where there's a distinct strategy that we've been asked to follow, and that we decide allocations in that.
So it sits in their entity, and basically you're the PMs for that pocket.
Exactly,
essence, right?
Exactly. Which again is something that we're quite proud of. Of course, we'd love to disclose a name, but
Sure.
we confidentiality is a big part of what we do.
Yeah.
We take that very seriously. But yeah, that's so we're managing different pockets of capital and with different strategies, and that's just kind of that thinking about what do we want to do long term.
Yeah.
That is on the asset management side what we want to be doing. We want to be doing more of what we're currently doing, so similar strategies.
Yeah.
But also add new strategies. And we've got a number of ideas in terms of what we think would work. And it also depends a lot on the timing in the market. For example, the market will continue to be cyclical. It's not just up or down from here. And at different times in the market, certain products might be more or less suitable. Where in a bull market, you want to be very just beta driven and just be able to outperform the market, but also ride it. And when the market seems to be turning, there's other type of products where you can still make quite attractive returns, but with different strategies.
Yeah.
So we want to grow that asset management business, want to grow the AUM. We can also, we do more managed accounts. There's lots of different things that we can do.
Yeah.
When the business matures, right now our venture fund is very early stage. We can also do more maybe a growth stage fund or, once the space is ready for that. But we plan to grow with the space on the asset management side.
Yeah.
And on the advisory side, one of the things that we've been trying to do so far is every deal we look at, we obviously look at the commercial aspects. Well, the very first bar is actually reputational, where if we don't think that this is brand enhancing or if there's any kind of brand or reputational risk, then we just don't do it.
Yeah.
Second is we have to click with the client, with the team, and just culturally and think that it'll be interesting and fun to work together.
Sure.
And then once we're past that, we look at, can we actually succeed in doing this deal, like deliver what they want to have, and hopefully also deliver more than what they want. And then the commercial side, the fees and all that has to work too.
Yeah.
But that's kind of really the last thing. What we look at for each deal too is just how is this different? Is this changing the space in any way? And we try to do that for every deal we look at. Just to bring out a couple examples, like Blockstack we worked on was the first SEC-approved token.
Yeah.
And we worked on the non-security, non-SEC side, but still working as part of that. And then earlier this year we did Solana, which is a layer 1 blockchain, which again is a new type of technology that's now has a lot of traction and success. And NFTs are very, very non-fungible tokens are very hot right now. And we worked with Dapper Labs, that was the innovator in the space. They invented the NFT, they invented CryptoKitties. So, likewise with the M&A that we do, we try to do firsts. And we're also working on another M&A transaction right now, which is not public. But when that comes out, it'll be pretty clear that that's also a first
of its
in the
kind.
space.
Yeah.
So we want to try to keep doing new things and doing firsts. So we don't have to be the largest. We just want to be the best, and we want to constantly be innovating. As the space grows, we'll also start to see an increasing amount of competition from existing advisory firms. First, like the boutiques, then eventually the large investment banks. Something like Coinbase IPO that Goldman and others are doing. We can't do that. We don't have the distribution. We don't have the licensing to do that. But maybe over time we will, if we decide to. But right now we're fine just being a boutique and being kind of
Best in
special
class
forces,
there.
not
Yeah.
infantry, basically, right? And that's kind of what we want to keep doing.
Awesome.
But we'll evolve with the market.
Yeah, and who knows?
We just want to be a leader in our space. That's the key thing.
Well, you definitely are setting pioneering boundaries. That's for sure. All right. So for the next segment, I think you'll definitely have to come back because this by itself you could talk about for weeks.
Yeah.
But just talking about the crypto market, would love to get your take as obviously swimming in those waters day in, day out. The entire family is all in, getting questions from your 6-year-old about BlockFi and Blockstack, and your son saying, "Why are you picking this candidate?" and everything. Totally love it.
Yeah.
But let's maybe just break down your kind of thinking of the landscape and from the context of maybe someone who's still pretty new to crypto, how maybe they should think about it from a long-term, maybe plain vanilla-ish investor perspective. But maybe even before that, we can just set some context on centralized versus decentralized, because people always jump on immediately into the decentralized tangent and why that's so important without people really realizing the world that we live in. So,
right.
How do you think about the space, and what kind of overview can we give into? And maybe you could touch a little bit on DeFi and Nifties. We'll definitely have you back for much more detailed segments on that, but just from a one-on-one overview perspective. Yeah.
Sure. So to start with, centralized and decentralized. I mean, centralized is what most just think about everything else as it is right now outside of crypto. That's centralized.
The world we live in, basically.
The world we live in, especially the financial world we live in. Everything's centralized. There's a lot of power centered in certain institutions. Same thing in the internet, right? There's a certain amount of institutions that have most of the power. That's a centralized world. Crypto also has that, in that, especially now, there's a number of entities that have grown quite big. And the exchanges are probably the best example, where a lot of the trading flows run through the top 10 exchanges. Probably 90% of the trading flow runs through the top 10 exchanges. So, and they're kind of spread all over the world, but that is quite centralized. Now, those exchanges are also doing different initiatives to actually either decentralize themselves or participate in the decentralized network. So they're not static. They're much more dynamic than your traditional centralized organizations. Yeah. Now, decentralization, Bitcoin is the best example of that, where the Bitcoin blockchain is powered by the miners that basically provide the computing power and the hash rate to make sure that the Bitcoin blockchain is constantly updated and kept secure. Those are spread all over the world. And there are obviously certain centers where there's a lot of mining going on.
Concentration risk, if you want to think of it.
You can't flick one button right now, unless you shut down the internet or power globally. You can't shut it down. And there's no one that you can call and say, hey, I don't like what you're doing. Can you stop it? So that's decentralized. And then there's lots of different examples in crypto too of like decentralized finance, DeFi, right? Where the ideas, the projects start centralized. They kind of have to, because you need 3, 4, 5 people that get together and say, let's do this. But then the whole point of it is, over time, they let go of power. They might bill it out with tokens, and over time, they put all decision-making power out to the token. So it's basically one vote, one token, one vote. Mm-hmm. And there's enough distribution of those that no one really has more than 50% or even de facto control, and it's actually decentralized. And it's a very, very new thing to crypto. I liken it with when limited liability companies were invented, right? Like before that, it was just, you have you and your business and they're inseparable. It's just the same entity. All of a sudden you have this kind of distribution of not only liability and risk, but also participation in something, right? Similar here, where you right from the start have kind of distributed participation. You have way many more stakeholders and people who want to make this success, and the decision-making power is much more distributed.
So it's much more scalable, more equitable, a lot more people can participate. The barriers of entry to participate
they're much lower.
Almost non-existent, basically.
They're much
right?
lower. I mean, it's still very early days.
Sure.
Centralization can also drive a lot of efficiency, both in governments and in companies, right? You can get more done in a short time if done right. If done wrong, then you can't. So there's still a lot of learning to be done and a lot of structure. It's still a lot of testing and innovation going on. Every time something new comes out, they'll often have some tweak to the governance structure that someone didn't have before. So it's still a lot of experimentation. It's still a very early stage. If one uses one's savings, for example, to purchase some of these tokens, you have to realize that it's an early stage, and that some of these will be around in 6, 12, 18, 24 months, and some won't, and some will grow massive.
Yeah. Okay, so that's decentralized versus also centralized, just for some context. And then in regards to kind of breaking down on how you think about the space, and not necessarily trying to say that is the one map, so to speak, but how do you think about it if you were, let's say, to explain it to Max, who's 10, obviously super bright for his age, but generally speaking, how would you kind of cut that down?
Yeah, I think there's a lot of different views on taxonomy in the crypto world in terms of how to categorize and bucket things,
sure.
and it changes over time, and it has changed even since I started. Where when I started, well, I'll come to how I see it now. So, Bitcoin is obviously it takes up anywhere from 60 to 70% of the market cap at any given time of the total crypto market cap. So it's quite dominant. It is unique in that it's the first.
Yeah, and here we're talking value. Yeah.
Yeah, in terms of value, yeah. And it's very much viewed differently now than when it started. And again, that's a whole segment in itself. But the way people view it right now is more of a store of value in terms of it's a digital asset that people have trust in. It's been around for 11 years, and that if people feel like they can put money into and they keep it there, and it's got a limited distribution, it's got a fixed supply, it's got a very clear inflation rate which is going down over time, and especially in this current world where fiat is being devaluated day by day, literally. Bitcoin has a very unique place there, and
it's deflationary by design.
Yeah.
Right?
And it's not to say, again, the crypto world is not static.
Correct.
So one can buy Bitcoin, stick it in there, but you kind of still have to keep an eye on things because there might be new equivalents that get built up over time, and something might happen with Bitcoin, or it just might fall out of favor. But right now, it kind of sits in the zone over there. And then the base layer is what people typically call like layer one blockchains or protocols, where you can think of it as like a computing layer that you can build stuff on top, and they then have smart contracts typically, which is basically smart programming where you that allows you to build things on top. So Ethereum's the first and most well known. Typically something like 15-20% of the crypto market cap. So Bitcoin and Ethereum between them are quite dominant. But there's lots of other Ethereum type projects that have come up. They're generally referred to as Ethereum killers. I don't really subscribe to that description.
Yeah, that's a little bit of that tribalism in the crypto space, right? Yeah. It's kind of like it's either this, so it's nothing, which is
so they're not Ethereum killers, they're Ethereum competitors.
Yeah.
And as with any innovative sector, the competition is healthy for everyone. It makes the Ethereum crew up their game, and everybody else has a target to try to achieve.
Sure.
So there's a number of those, right? And then initially, people decide which one to build on top of. But increasingly, there's also both blockchains that are interoperable, but also layer twos, kind of like a layer on top of that base layer that allow these different assets on these different blockchains to talk to each other. So that's a space with huge innovation still, but where a lot of the investment in 17 and 18 went into that layer. Now where a lot of the investment is going in, and where I also put DeFi, is on top of that computing layer. So kind of think of it as the apps almost, the applications on top of this base computing layer.
So we have layer one, the base computing. Layer two is now really where it's at.
Yeah, and I would say it's almost layer three, because layer two is the interoperability and also speeding up these blockchains, which can be a bit slow. So the layer on top of that is where a lot of innovation is going on right now. And DeFi is one area, decentralized finance. Another is in gaming and gaming assets. Another one that has gained a lot of notoriety recently is NFTs, non-fungible tokens. So there's a number of different e-commerce. There's all kinds of apps and products being built on top of this, which spans the whole spectrum of what normal startups could do. So that's just a very high level taxonomy way to think about it.
Okay. Are there any maybe tokens, be it protocols or groups, that you think are really doing something that's very kind of interesting that people should keep a watch on? From the space as a whole. You'd mentioned Dapper Labs were kind of really always the pioneer on the Nifty side, with CryptoKitties, which, also infamously showed the issues with some of the chains, right? But just out of curiosity, are there any names that, if you just had to mention 2 to 3 that you think are just kind of interesting, and maybe, me, I love to put the spotlight on people maybe that are not getting the credit they deserve, right?
Right.
So I'm just wondering if there's anything like that on your horizon right now.
Yeah, maybe I'll talk. See, I have a number of them.
Sure. Yeah, no, I know. That's why I said 2 to 3.
And I want to plug all
okay.
the companies we work with, because again, we are very picky in terms of who we work with. So I think they're all doing very, very interesting things.
Yeah.
So I would think, Origin Protocol, which is one of the first we worked with, and who gave me this.
The HODL shirt. All right.
T-shirt, by the way.
Yeah.
They are innovating initially in e-commerce and decentralized marketplaces.
Yeah.
And now they also have a DeFi product, which is an interesting, basically a stable coin, but that earns attractive yield with kind of quite unique structure.
Yeah.
And they've also just moved into the NFT space, where they helped do a sale for a DJ called 3Lau.
Okay.
Where they did a sale last week where they sold about $10-11 million worth of his NFTs, and it was very, very popular. So they're just innovating a lot. And they're very, very experienced. Ex-Google, one of the PayPal founders, just like really early employees at Google, Dropbox, like just very strong team.
And just to contextualize this point, like on the DJ, like my understanding of a big part of the NFT is to allow creators, be they artists, musicians, teachers, consultants, basically to accrue a lot more of their talent and get paid and take out the whole middle persons that we have in a centralized world, right?
That's right.
So a classic example is if I'm an artist, and then I do all my art, and then I have to go to a gallery, and that's 20-30% right out the door.
Yeah.
Right.
And the distribution is just whoever walks into the gallery.
Exactly. It's finite, basically, right? Whereas if I'm an artist and I'm now on the blockchain, basically anyone who's on the chain can see my works. I can get obviously the work tokenized and earn something from that. And I believe even there's some chains where even if the work ends up being resold later, the artist can still even get a fee or something from that, right? And I just love that vision of where it's going, because there's a huge part of our society that there's always a ceiling, there's always a lack of scalability unless you break out, to the very few, right?
That's right.
Yeah.
I mean, as with anything that's innovative and new, there'll be people who are for it and people who are against it.
Yeah.
So the argument for you just made in terms of empowering artists and taking more control of their own destiny and getting a broader distribution, moving to the digital age.
Yeah.
People against it are saying, well, all these NFTs are being sold for really high prices. It's only to let the rich get richer, and the artists are just kind of selling out, cashing out.
Yeah.
And the reality is, this is an innovation. This is highly empowering for artists, especially artists around the world, right? Right now, I think, and this is crypto in general, like there's a lot of people who just don't have perspective about the fact that having a bank account, major luxury.
Yeah.
Having access to financial products, major luxury. Having a credit card, major luxury.
Yeah.
Having a currency which doesn't depreciate 20% a year, major luxury.
Yeah.
There's billions of people around the world that these things they're not taken for granted. And crypto actually helps them massively. Yeah. And likewise for burgeoning artists around the world, you can now sit in Rwanda and be a phenomenal artist. If you create digital NFTs and you have platforms on which to sell them, I mean, before, what are you going to do? Get your sculpture or painting into a gallery? Where, right? Yeah. So I think it's, I think some people are criticizing it without really thinking about it, or maybe they're scared of the playing field being leveled. I don't know.
Or a combination of many different things. But I mean, I think that's
there's always vested interest that when there's disruption and innovation, people are going to have strong opinions for or against it. So that's on. And then just while we're on the topic of NFTs, I'd highlight Dapper Labs, which again we were incredibly fortunate to work with. I mean, again, they were pioneering in the NFTs and CryptoKitties. And when we got a chance to work with them, because they built their own blockchain, and that wasn't to latch on opportunistically and just raise money. That harked all the way back to 2000, their experience in late 2017 when they did CryptoKitties, and it pretty much broke Ethereum. The whole blockchain kind of just almost jammed up. They realized that they need something that just suits their needs, because they want to create digital content and they want it to be very consumable. So, there's not going to be one blockchain that wins out. So they kind of tried to design a blockchain along the lines of what they think they need. And that's then the token, the flow token that they released. And again, when we had the opportunity to work with them, I was literally in San Francisco for San Francisco Blockchain Week. And I left and went on a plane and went to Vancouver to see them.
Yeah.
Kind of like, this is like what I learned at Goldman, right? Like, get in there, go face to face, drop everything and go, right?
Show the commitment, show the skin in the game, so to speak. And obviously they must have liked that.
Yeah,
right?
and then we got the mandate, we worked with them. But even when we were doing that, like late 19, but primarily like the first few months of 20, when we were traveling around Asia right before COVID, the last time I traveled was with them. Seems like it is a long time ago, almost it's a year ago.
Yeah.
More than that, it was still a really hard sell, incredibly hard sell. Like, well, and then they ended up launching, and everything that they said, and we said with them in the pitch, everything
is now playing out.
Played out.
Yeah.
And they launched NBA Chop Shot along with the NBA, massive success, and they've got a lot more content coming, and it's opened up people's eyes to this. Both in terms of the players, the NBA players, even just not, in the NBA, probably top 10% of the players get, whatever, 70, 80% of the economics.
Yeah, it's the same issue, right?
Now there's a chance for other players to think about it, be creative and monetize, and same with artists, right? I know that 3Lau, he mentioned in a Clubhouse room the other day, he's been inundated with requests from other artists about how do I do this, and so I think it's, that is playing out, and there's lots of other like strong NFT companies like Animoca and that whole group, Action Infinity, Sandbox, and a lot of new startups and Engine in gaming, and it's a lot of innovation. Yeah. So that's another one I would highlight, and then I would highlight Solana, because they again have taken a different approach to layer one blockchain in terms of looking at what's out there, what they think they can do better, and just building it up in a different way. And again, I wouldn't say it's an Ethereum killer, it's a competitor, and they will each have their ecosystems, and eventually they'll be interoperable. But very, very strong technical team and very innovative team in terms of what they then did in their collaboration with FTX and Serum and building an ecosystem around that.
Yeah.
And then I also would highlight Blockstack, which is actually a very unique project in that it anchors to the Bitcoin blockchain, but they have their own smart contract language called Clarity.
Gotcha.
So it's kind of also a competitor to the other layer one smart contract blockchains, but where they anchor their security on the Bitcoin blockchain. So in that sense, it's and that's an indisputably secure blockchain, right? And
yeah.
It's so that and then they're basically building a decentralized capability on top of that, and their history harks back, very far to Princeton with their PhDs, and they're doing research, and then blockchain became the best way for them to solve their problems. And they have also they are builders. They're not they don't hype up really what they're doing.
Yeah.
So they have taken a while to just kind of get this realization in the community of what they're doing is actually quite special. But recently they've started to gain that traction and attention. And the interesting thing about them, it's actually, they're innovative in many ways. One is also that, again, they were the first SEC approved token.
Yeah.
That took a year and frankly millions of dollars in legal fees to get that done. So that is in itself is a big one to take on the chin for the sector, so to speak.
Yeah, it pioneers for the whole space, right? It gives it that credibility as we say, one by one people come around, right?
Yeah. And at the same time, they're very, very strong, I guess you could say, decentralists, where they are very much in the game of disrupting existing big tech. So they kind of had to use the system to fight the system, so to speak.
Yeah.
So now what they've done, and this was the plan all along, is they have actually decentralized themselves such that they are no longer SEC regulated, because they now have moved power and decentralized it. So they've gone from being SEC regulated to not being regulated.
Interesting.
And which means now the token can also trade and be sold and bought and sold in the US, for example. And so it's very unique, and a lot of people don't appreciate how
the nuances, right?
How groundbreaking that actually is.
Yeah. Awesome, awesome. Well, Casper, we're going to have to have you back, man, and there's so much more we could go on about that we will. Misconceptions in crypto, the fact that you can be earning yield, which can be anything from low to high single digits to teens, to special dividends, to tons more. It's been fantastic. I suppose if we could just maybe end on one maybe comment. If you had something to leave to the Dragon interview kind of listeners and whoever else will get a glimpse of this.
Sure.
About crypto, about anything else in your kind of journey, and if that was to be like a Facebook page or a Google drop page or a billboard or whatever, what would it be? Apart from HODL, of course.
Yeah.
I'm just kind of curious.
I would say one thing would be on entrepreneurship, where I would just say to encourage everyone who's got the idea or like the desire to be an entrepreneur to just kind of jump into it and to just keep at it and be tenacious about it. But what I'd say to all those watching from the crypto perspective, assuming that maybe the audience is on that sliding scale, kind of very early to just starting to look at crypto, is just you need to change your frame of mind a bit and just don't try to squeeze it into the existing framework. Come into it with an open mind, look at it, and start to dabble. Deploy a few percentage of your net worth into either Bitcoin or Ethereum. Sign up on a few crypto exchanges. If you've got the time, try a few of the DeFi protocols. If you've got a bit more capital, one exposure, find some crypto funds to invest in. But start getting involved, because this thing's not going away. And for the audience that has capital to deploy, it's likely you have children or plan to have children. And if you want to be able to have a conversation with your children as you get older, you need to understand crypto. Otherwise, they're going to think you're a dinosaur, because it is a generational thing. And crypto is very, very powerful. When you speak to the teens and 20-somethings, it's completely top of their mind.
It's not even a question for them, like digital and physical, they kind of see it in unison in essence, right?
Completely. Yeah. So it's something that maybe you've been ignoring it until now, but you can't keep ignoring it.
Yeah. Fantastic. Thanks so much for your time.
Thanks.
Casper.
Thanks for having me.
Appreciate it.